All right, welcome back to the channel for this week's Breakout Watchlist from July 5th to July 8th. In this video, I'll be covering the top 10 setups that I'll be looking at going into next week. Each of these stocks either have strong fundamentals, strong technicals, or strong volume patterns that lead to stronger uptrends. This video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the stocks. And finally, if you guys are coming to the video just for one setup, there's going to be timestamps in the comment section below, so you can click there and get exactly what you need. Here are the 10 stocks that we're going to be covering today. If you know these stocks, you can see some groups that we're going to be highlighting: China, solar, and biotech. And before we get into these charts, like last week, I want to do a quick market recap to see how aggressive we want to be coming into this week. Now we're going to the MarketSmith chart, looking at QQQ. 2 weeks ago, we closed very strong on Friday, back over the 21 EMA, closing at the high of the day here, right around 294. Monday of last week, we had a decoupling day where solar stocks, biotech, and China stocks, all the leading groups were acting well, while the indexes were down just a little bit. So that was positive action. But unfortunately, on Tuesday, we had a flush day where the market was down 3%, closing back under the 21 EMA and the 8-day EMA. And then the last 3 days of last week, we just kind of chopped sideways, got Biotechs started working a little bit more on Friday. But now we are below declining 8-day, 21, 50, and 200-day simple moving average. There's a potential that we're putting in a higher low here, but semiconductors made new lows on Friday, which is never a good sign for the overall market. Some of the larger cap names, Tesla doesn't look great right now as well. So while the indexes might make a new low here, we did get a distribution day, the second day after a follow-through day. That's a 95% chance that we make a new low there. So I'm not super optimistic about the general indexes at this point. Definitely want to be less aggressive in my trading, smaller position sizes, taking profits a little bit quicker, and be a little bit late to the party if this is a lower low and then we start rallying up. All right, now we're going to the individual stocks that I'm watching. The first one is ACHC. This is in medical healthcare, 37th strongest group out of 197. This is another group that's been kind of moving up the ranks in MarketSmith, so something to watch there. It's got an A- group strength rating. This stock has a C accumulation distribution. Ideally, that's a little bit higher. We want to see heavy volume days come on up days when the stock's being accumulated and low volume pullbacks. So institutions aren't selling. It's more retail selling on pullbacks. So C rating, not ideal. A little bit higher would be better. Has a 92 overall composite rating along with a 95 individual relative strength rating. You can see this relative strength line compared to the S&P 500 is very, very strong, nice uptrending there. I want to take a second to talk about the relative strength line and why it's so important. As traders, we want to outperform the market. That's the only reason why we're trading, right? We think we can outperform the market. The only way we're going to outperform the market is if we buy stocks that are outperforming the market. And what do stocks that outperform the market do? They have their relative strength line compared to the S&P 500 or NASDAQ in an uptrend. So all the stocks that we are going to be covering are going to have these relative strength lines in an uptrend because those are the stocks that we want to own to beat the market. So relative strength rating, 95, that's very strong. Fundamentals this last quarter, 43 earnings per share growth, sales up 12%, after-tax profit margins up 10%. Within the group of 18 stocks, number 1 on relative strength, number 2 on overall composite basis, and fund ownership did decline in March. That's one strike against this. Going to a chart, really quickly, want to go to a weekly chart. You can see blue skies ahead of this. That's something that we want to see. Less resistance up top. Then the stock has only one group of sellers, and that group of sellers are people in profit, selling for profit, not people that can get out for break even. We don't want to see this overhead supply too heavy. Back to a daily chart. You can see on Friday, really nice action, up 5.8%, breaking back over the 8, 21, and 50-day moving average. We're above what's now a increasing 200-day simple moving average. And we closed right at the high on Friday on slightly above average, lighter volume than average. What I want to see here is if the market conditions worsen coming into next week and we pull back into $70, I want to see that hold. And that's an area where I would want to start a position and then manage my risk against the 50-day moving average at like $69. Want to keep my stop losses very, very tight in this environment and keep my position sizes low. That's ACHC. Next, we have ALKS. This is in the biotech group. Again, a leading group that we want to be focusing on. Very nice cup and handle here, putting in a higher low, higher low. This is a stock that had bottomed well before the market bottomed. You could see this put in a low beginning of December, and we know what the market has been doing since beginning of December. So another stock that has that relative strength line and a very strong uptrend. You can see the blue dot here on MarketSmith shows that the relative strength line has hit a new high. And I like to see that, especially if we see that before the price hits a new high. This has a little bit of overhead supply and on the left side here, but not too much. And similar to ACHC, I want to see this hold this $30 area or the previous lows in these last 5 or 6 trading days. So the lower I could get my entry to 30, the tighter my stop can be to the 8-day EMA. But by doing that, it's less probable that you're going to be buying a winning stock because it's pulling back. Otherwise, just breaking over Friday's high, which is 30.58, call it 30.60, and using the stop, maybe half stop at 30, half stop at the 8-day EMA will still keep your risk tight on this one, ALKS. Next, we get to our first China name, and this is kind of a combination of strong groups, China and solar. Energy Solar is the 21st strongest group in the market out of 197. The stock is DQ, has an earnings per share rating of 98, super strong there. Group strength A, accumulation distribution A+, 99 overall composite rating with a 99 individual strength rating. Very strong fundamentals, as you can see on the bottom here. Earnings per share up 524 year over year, sales up 400% year over year. After-tax profit margins is improving by 42%. Within the group of 21 stocks in the solar group, this is number 1 on every single metric that MarketSmith puts together. Only drawdown is we did see fund ownership decline from 515 to 500 from December to March. Many growth stocks saw this decline in much more severe declines as well. This doesn't show June's numbers just yet, so my guess is seeing some of these high volume days as we put the stock into an uptrend, the stock's getting accumulated by institutions. So where do we want to enter this stock? Obviously, this is a stock that's checking all the boxes in a weak market. Imagine how strong it could be in a strong market. This did pull back, had a shakeout under the 8-day EMA here, and then really strong day Thursday and an inside candle on Friday on lighter than average volume. I'm looking for a break over Friday's high, $71 as a potential entry point with the stop under the 8-day EMA. Now we switch back to biotech. The stock is HRMY. I also want to go to a weekly chart on this because it shows blue skies ahead, very little overhead resistance. So that just eliminates an entire group of sellers that are trying to get out for break even or taking small losses. Nearly everyone in the stock, on the long side at least, is profitable in the name. And we did have a nice kind of cup handle through here. Breaking through 47 probably would have been a better entry point, but can't do anything about that now. I did not put the trade on there, but we did rally through 50, kind of had a pullback under the 8-day, 1-day shakeout on Thursday, and a really strong move with the group. Biotechs were very strong on Friday, so closed up 6.6% on Friday, near the high of the day, 95% closing range. Has very strong fundamentals year over year, which is great to see, especially for a biotech. Only downside, a little bit less liquid, only about 500,000 shares traded a day on this one. A couple areas to watch is if we pull back into this $50 area, you'll also have the rising 8-day EMA, so 2 potential areas of support there, or just breaking out kind of above the previous highs here in $53 area there. Now we go back to Chinese solar stocks. This is JKS. Again, 21st strongest group in the market, so A group strength rating, A accumulation distribution, 99 overall composite, 98 individual relative strength rating. That relative strength line compared to the S&P 500, very strong uptrend. This did have a negative 40% earnings per share growth year over year, so that's one strike against it. I also find this stock a little bit tough to trade because it is so volatile intraday and within the week. But going to a weekly chart on this, these 2 weeks or these 2 bases really kind of mirror each other. And I want to point out last time this had a very long-term base where we put in a low, higher low, shook out that higher low's low. So really kind of making investors and traders work in the stock. And then we tighten up on the right side, and we have 4 or 4.5 weeks where this just skyrockets and has over 100% gain. Now, the market in this environment was much better than the market that we're trading in right now. You have to keep that in consideration when you're thinking about when to take profits, how to manage your risk. But this stock has the ability to make these quick strong runs in a short amount of time. So similar base here, initial low, higher low, shake out that higher lows low, really making investors work. Another shakeout through here, pulled back to the 10-week, and now we're tightening up right near that breakout point. So back to the daily chart for JKS, looking for a break over 70 as a potential entry point on strength, market strength, group strength, all that. Or if the market comes back in next week and we see more weakness, you have the 8-day EMA around 65. So around that $65 area is somewhere where I would look to manage my risk. Got one more Chinese stock for you. This one is LI. This is an EV stock. So auto manufacturers, weak group right now, 142 out of 197. That's kind of getting dragged down by Tesla, which has such a large market cap. But the theme of EVs other than Tesla have been working, and the China theme combined with that also gives it a little bit more strength. Strong earnings per share, strong sales, improving after-tax profit margins. Within the group of 33 stocks, this is number 1 on relative strength, number 1 on overall composite basis, and one of the few growth stocks that actually saw fund ownership increasing. So checking a lot of the boxes there. On a technical perspective, this ran from 1880 all the way through 40, so over 100% gain in less than 8 weeks. Now we're pulling back less than 25% from the highs. So this is starting to qualify for the high tide flag that we haven't seen very many in these last 6 months. So really interested in this name. Now we do see high volatility these last couple days, but if we go to a 60-minute chart, it does look a little bit more clean, but it does need a little bit more time to flag out. This is just a stock that has been so strong in a strong group that there's no clean entry point, maybe breaking over Friday's high, $39 right now, but I want to give this a couple more days to tighten up, have volume decline, have the short-term traders take some profit while there is volatility coming back into the name, and really make this an A+ setup. So I want to be a little bit more patient with this, but this is a stock that you need to have on a general watch list. Now we go back to Biotechs. This was NBIX, weekly chart on this to see a little bit of overhead resistance here from 100 to about 120 area. So not an A+ setup, but one that we want to be watching because you can see these waves, big move from 108 down to 71. Then we go 100 to 75, putting in a higher low. Then 98 to 88, putting in some VCP action, volatility contraction pattern. And now on the right side of this base, building under $100, you see price really starting to tighten up. Volume is under the 50-day moving average for the last couple trading days. One day went over, whatever. So this very clean entry point, breaking over 100. Now this stock hasn't been able to close over 100 except for on April 8th. So that would be a character change if we see a breakout and close over $100. So if I do buy the breakout over 100 and it doesn't close over 100, I'm cutting the position. This is a market where you need to manage risk first, make money second, but this is in a strong group. Biotech, a little bit less liquid than I would like, 800,000 shares traded a day on average, but really nice technical pattern here. VCP, we're tightening up, building under 100. There's your entry point for NBIX. I got 3 more stocks to cover in this video, but before that, if you guys are enjoying the video, please do me a huge favor and leave a like and subscribe to my channel. I make breakout watchlist video like this every Sunday, along with other trading related videos. Thank you for all the support. Now let's get back to the charts. The next stock that we'll cover is PRVA, and if you follow me on Twitter, I've been talking about the stock for a couple weeks now. This is in computer software medical, 94th strongest group out of 197. 96 relative strength rating or earnings per share rating, B+ accumulation distribution, 95 composite along with a 90 relative strength rating, all good things there. Strong fundamentals, fund ownership increasing, and strong stock within the group. So all the boxes are checked. Now we got to go to the technical side of the chart. I like that the stock put in a low on May 12th, and while the market put in a low at that point, but then the market rallied, this stock rallied, and then eventually the market put in another new low. But this stock didn't put in another new low. This put in a higher low, showing relative strength, and you can see the relative strength line a little bit. It's kind of hard to see, but putting in higher highs, higher lows, higher highs, higher lows. And now the stock is really tightening up under this $30 pivot. I did trade this last week through 30, got stopped out for about, I think it was a 1% loss or so. Pretty small position size, but it got out over 30, came back in, and now we closed three more days right above that 8-day EMA, which is now going flat. So with this, if market conditions improve, no excuses for the stock. It should be clean through $30. If market continues to come back in and we see more chop, this might need a little bit more time to allow that 21 EMA to catch up to price, and then we'll turn up when the market does. But if the market's strong, this should be breaking through 30 and a potential entry point there. The next stock that we'll cover is SWAV, and I think I had this on a breakout watch list a couple of weeks ago as it broke over the 200-day simple moving average. But since then, we had this distribution day on the 14th of June where it broke under the 200, the 21, 50, and the 8-day EMA, closing at the lows. So at this point, I took it off my watch list, wasn't paying attention to it, and then it made a quick turnaround, zipping through that distribution area, and now starting to build under $200 here. So volume starting to lighten up. Action is tightening up a little bit. Maybe we need a couple more days to tighten under the 200-day, but strong action on Friday, up 3.9%, closing just under $200, above all the key moving averages. The 50 days just starting to flatten out, maybe get in an uptrend in a week or so. 200-day will still be in a downtrend for a little bit. So it's not an A+ setup, but I do like this cup. And then we shake out, so all the weaker hands get shook out from 125 to 113 here. And now we're tightening up with an entry at $200 for SWAV. And the last stock that we'll cover is VRTX. This is also in biotech, very strong group right now. Going to a weekly chart, you can see very clean skies ahead, blue skies ahead, nice big cup handle, little shakeout, and last week's action, inside candle on less volume than the previous week as we're starting to tighten up a little bit. It's hard to see on the daily chart, but on the weekly chart, you can see that we are in fact tightening up. Really good action on Friday, up 2%, closing at the high of the day, riding this rising 8-day EMA up. A couple areas to watch here. If the market is weak coming into next week, we have the rising 21 EMA and 280, 275 as a potential area of support. So if the market's weak, I expect this to come in and kind of hold this 275 area. But if the market's strong, no excuses for this stock. It should be breaking into new highs around 292, 293. And that's where I would be watching it on the long side. And that's going to be the breakout watch list for the upcoming week. If you guys enjoyed the video, please leave a like and subscribe to my channel. I make this breakout watch list video every Sunday along with other trading related videos. A big thanks to MarketSmith for sponsoring the video. If you guys enjoyed the trading research platform that we were using to break down each of the setups, there's a link in the description below that you could try it out yourselves. And finally, if you want to hear more from me throughout the week, you can follow me on the other social media platforms. I'm at Nick_Drendel for TikTok, Instagram, Facebook, and StockTwits, and at Nick Drendel for Twitter. Have a great 4th of July and the rest of your week, and I'll see you guys in the next video.